This computer. There we go. Recording is now in progress. So as I said, my name is Mark Marcellus. I'm with Watson Realty Corporation. More on me later. I don't want to waste too much time telling you all about me. This is more about you and what you guys want to learn and navigating the home buyer process and what we can do to help you through that. You'll hear plenty about me in the process. If you would like to, feel free. I have your names. I have your basic contact information. But if you just like to type hi in chat, you can. If I say something that strikes something with you, just let me know. I'd say, yeah, I understand how you feel. I feel the same way, and that kind of stuff. And make this as interactive as you guys are comfortable with. Type it in chat. I want to hear that if I say something that resonates with you, let me know. I'd love to hear it. So we're going to talk about navigating the home buying process. I'm assuming that if you're here, you have not purchased a home yet. That may or may not be true. As a matter of fact, I'm sorry, guys. Let me turn my phone down. As a matter of fact, um, yeah, some first-time homebuyer programs you can qualify for, even if you've owned a home before, but maybe it was years ago. Certain amount of time has gone by, 2, 3, 4, whatever. Uh, Even if you owned a home before, um, say, just your life situation was different, you can still qualify for some first-time homebuyer programs, which I find very interesting. We'll talk a little bit more about that here in the next few minutes. There will be a question and answer period. However, if you have a question, feel free to type it in chat. If I can pause during the presentation to answer the question, I will. Or if not, we'll definitely cover it during the question and answer period. Okay. So, as a first-time home buyer, let me know if you guys have experienced any of this. Are you concerned about whether you're going to be able to buy a house? Are you stressed out about the process? Are you intimidated? Are you just comfortable? You're just comfortable in your current situation, and you don't feel like the juice is worth the squeeze, if you will. Maybe you're anxious or you're uncertain. Can I get qualified? Do I make enough money? The rates have changed. How much can I afford? Is any of this ringing a bell with anybody? And like I said, if you understand or if you feel this way, feel free to let us know because certainly been there years and years and years ago, way back when dirt was invented. I bought my first house and I was extremely nervous about it and didn't know what I was getting myself into. But now it's old hat. I've made other purchases since then, and I understand the home buying process on a personal level because I've been through it so many times. So I can definitely help people navigate this process if you're feeling these concerns or these kind of feelings. Relax. It's perfectly normal. Um, Anytime you venture into the unknown, you never know how it's going to go. But just think back to some of the first jobs you've had or even recent jobs and how day one you weren't quite sure how everything was going to roll. You didn't quite know how things were going to go, but over time you just got into it and then you picked it up. And this is the same way. We'll walk through this whole process for you. At the end of this, you'll have a brief rundown of how it all works and what you need to do to be able to buy your first or your next home. So, just a couple of reviews about me. This most recent one right down here. Oh, whoa, wait a minute. What happened here? This most recent one right down here. I don't know if you can see my cursor or not, but yeah, we negotiated pretty hard with the builder, and my buyer saved $30,000, like just lopped off the top of their price. So she bought it for 410 instead of 440, which they were trying to kind of get us to, and that was a negotiation with the builder. I have handled loans for and real estate transactions as low as $40,000. Of course, those are long gone these days. And the largest loan and transaction I worked on was $5 million, placed up in New York on Fire Island. So I definitely would be able to help you guys negotiate and navigate these waters. I've been doing this for quite some time, since 2015, but I really got started much earlier than that. My family was in real estate, and I helped out quite a bit as a teenager, painting houses and typing up contracts and stuff. Just kind of grew up in the business. We service Duval, Clay, and St. Johns County, so that's like Orange Park, Jacksonville, St. Augustine. We could go south of St. Augustine as needed. Um, so again, this handsome guy right here, that's Mark Marcellus, and my partner Alan Wind will be involved as well um, in the process. Okay, so here are the basic steps to your path to home ownership. Um, it all starts with your pre-approval. You have to know how much your buying power is, and the only one that's going to be able to tell you what your buying power is going to be a mortgage lender. They can pre-underwrite your file. And by that, what I mean is they're gonna take a look at your income. They're gonna take a look at how much money you have. They're gonna take a look at what your down payment arrangements are, and then they're gonna take a look at your current debts and see and just make sure that you can afford the home that you want to be shopping for. So that's it's just really it just makes sense. If you don't know how much of a mortgage you could qualify for, you're kind of flying blind as to, what kind of house you can get into. And you could potentially be in a situation where you fall in love with a house that you think you can afford. And you really are like, oh, I want that house that has everything I need, blah, 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 blah. And then we try after the fact to get qualified. It's just not a winning strategy. It's much better to get to qualify, get pre-underwritten. You have your financial situation looked at by a professional, and then they would be able to tell you, based on your current situation, what you would qualify for. So that's where it all starts. And then you would house hunt with your realtor. We do a lot of things to help you find the home. The most powerful tool that we have access to is the multiple listing service. So that puts the power of 7,000 local agents at your fingertips because they all have contacts with homes that are available. We pull up the homes that are available that fit your criteria. So, for example, if you had a family of four, there's no way that we're going to be looking at a two-bedroom. You're going to need at least three or maybe even four bedrooms in a family that size, as an example. So we present those all to you. We find them right in the database. They get emailed to you, and then we go shopping. And the first thing we'll do is we'll go um, look at the homes and walk them and decide, okay, do we like this home? Do we not like this home? Are there other homes similar to it that we want to go look at? We narrow that down to one or two houses and then we present offers. So we might present offers on two houses and then we enter in negotiations. And I can tell you that I'm looking to save you money. I can also tell you that I'm looking for these days, I'm looking for the sellers to kick in the closing costs, to buy down your rate, to help improve your buying power. Okay. Um, Once we get through the offer and the negotiation process, this is where the majority of the work. needs to get done because then we have to get an inspection. If it's a condominium, we have to go through doc review. All the while we're financing, working with our finance guy, getting them the documents that they want. Okay. And you can expect that they're going to reach out to you and need more information. Then you sign, eventually it'll be ready for us to sign the documents at a lawyer's office or a title company. And then you get a set of keys at closing and it's time to move in. So we're going to talk about 5 mistakes that first-time home buyers make. You guys are going to have an early jump on what to do, because you will know what these mistakes are and be able to avoid them. So, first-time home buyer incentive programs are available in Jacksonville. Um, there's the USDA, where if you want to get a place that's kind of like out in the country that's going to work very well in like Middleburg and Yulee and Baker County and things like that, where there's just a lot of agricultural property out there. So you can qualify for extra incentives to help with your down payment there. There's also in-town options with Jacksonville. The city of Jacksonville has a $15,000 grant. Um, and then different parts of the city have $25,000, and I think the largest one that I've seen is $50,000 available. So definitely want to avoid the mistake of ignoring the incentive program. It can be dependent upon your income. It could be a forgivable second mortgage. It could be some sort of down payment assistance, and it will most likely depend on where the place is that you want to purchase. These are just some examples with a number. If you buy a place for $35,000 and the minimum down payment is $35,000 at 10%, 2%, would be an FHA upfront mortgage insurance cost. And then we can get up to $21,000 from the seller to kind of kick in. And that we'll have to find out if that includes the interest rate buy down or not. But they could do a combination of, covering closing costs, and then you can use those closing costs to buy down the rate, or they could just do a specific rate buy down themselves. And we'll talk a little bit more about that here in just a second. These are the types of mortgage that are available. Conventional mortgages is cookie cutter everyday mortgage, usually backed by different divisions that were started and backed by the government but are now private. So that's Freddie Mac and Fannie Mae. Federal Housing Authority is still a government. USDA, I was kind of mentioned that for rural properties. And then the VA, the Veterans Administration, has loan programs available for people that were in the military and had honorable discharges, and you just get your DD 214 and you see what you can qualify for there. Um, Federal housing, this has been around since like the 30s or 40s. It's a government agency that essentially ensures the bank, hey, even though this person is buying a home, um, we know that they're going to be borrowing a higher percentage and not putting down a sizable down payment. So they have a plan in place that allows you to qualify for a Federal Housing Administration loan. Freddie Mac, Fannie Mae, these are two companies they are private companies, but they're technically backed by the government or insured by the government. Really, I guess is the more accurate term. And those are more your conventional type mortgages where they typically like to see a 20% down payment, et cetera, et cetera. The rates are subject to the market in all three of them, although the rates tend to be the best in the Veterans Administration. So the benefits of an FHA loan, low 3.5% down payment. It can go as low as a 580 credit score, but be very careful about that because even though they will accept a 580 credit score, they do not like it when you are holding balances on things that have been defaulted. So you kind of have to be careful about that. They will go down to a 500 with 10% down, same type of thing. They're not too thrilled about uh, doing financing for people that have balances that were, written off or charged off. There are traditionally lower mortgage rates, higher debt to income ratios, meaning less down payment for you. You can choose between the 15 or 30-year options, very compatible with down payment assistance programs, grants, gifts, and the seller themselves can contribute up to 6% of the purchase price towards closing costs and buying your rate down. So, for example, if you did a rate reduction, uh, you could save, $20,000 in interest relatively easily just by having the seller kick in 2 or 3% towards a rate buy down. So this is the conventional loan for, it's traditionally backed by a private company or not backed by the government or sponsored by the government or um, guaranteed by the government, anything like that. So that's a conventional loan. That's why you those are available. Um, you can you can get a little creative on how to come up with the down payments on those. You can do a second mortgage. So you can put 10% down, then borrow 10%, then borrow 80%, and that meets all the requirements of the conventional loan. There's different options out there that are available for that. So, what can you use to fund your down payment and your closing costs? And what you cannot use, you cannot throw it on a credit card. Um, you're not supposed to take a loan out. However, you can borrow against your 401k and retirement account. Um, so if you have an active 401k or retirement account with your company, you should go ahead and log in and take a look at the balance. A lot of times people tend to set it and forget it, and then years go by and they have money piled up in there they didn't even know they had. And it may not be a good idea to cash out that money and put the money down on the payment on the house. But you can borrow against it. And then when you're paying it back, you're paying yourself back and you're paying your own account back. Certain loan types, not all loan types, but certain loan types will allow you to use gifts for your down payment. So if you have the kind of situation where there's somebody in your life that can give you a gift, um, that's definitely an option, a possibility. Stocks, bonds, cash that you have in documented locations that are properly seasoned and have been there at least 60 days. Um, those are all good ideas on where to get your down payment money from, in addition to down payment assistance and things like that. Buyer's eligibility is based on an underwriter review. An underwriter is a person that is in between the lender and the borrower. They act as a liaison and they are reviewing the financial strength of the file um, within a set of objective parameters. So they're going to look at your ability to repay the loan, they're going to look at your willingness to repay the loan, and then they're also going to look at the collateral. So, for example, your ability to repay the loan is going to be is going to be, a look at your payment. Let's say the payment's going to be $2,000. Well, they're probably going to want to see between $6,000 and $7,000 as a minimum, to make sure that the bank would feel and the investors would feel comfortable that somebody who makes that much money would be able to make a $2,000 mortgage payment. It really is that simple. Your willingness to repay the loan, well, they detect that by just taking a look at your credit score. So if you've got a car loan on your credit and you've paid it faithfully every month that it's been active, well, that speaks volumes about your willingness to repay a loan. And that's the kind of thing that they're looking at. And then they're going to analyze the collateral. They're going to require you to get a professional appraisal on the property. And they're going to want to make sure that if you're buying a property for $300,000, that it's actually worth $300,000 based on recent sales and what we call comps, or short for comparables. If you have any questions, feel free to just type them in chat. There are no questions so far, but if there's anything that you need, just let me know. Mistake number two, not getting a pre-approval. I kind of alluded to this already, where, you could find yourself in a situation where you just have it in your mind that you can afford a 350 or $400,000 home. So you start going out and looking at them, and next thing you know, we're talking about an offer. When we submit the offer, the agent on the other end of that transaction, they're going to want to see a pre-approval letter. So we might as well get the pre-approval letter before we even start shopping so that we know what our buying power is. Three pillars of a mortgage approval. Very simply, we've gone through some of this already. Credit, income, down payment. They're going to want to source the down payment. They're going to want to prove your income. They're going to want to pull your credit. It's that simple. Um, let's see. Based on three factors. What happened there? This thing is just getting away from me. Credit, income, assets, a pre-qualification can determine what house you can qualify for. It will improve your bargaining power when negotiating with the seller. You'll have an estimate of what your monthly payments will be and what your total investment will be. And you can talk to the loan professional and identify which loan product would be best in your current situation. They have different loan products that have kind of creative ways to lower your down payments and creative ways to lower your actual monthly payment. All right, so tips for going through the loan pre-approval and qualification process. Okay, continue living at your current location. Don't move. Continue paying your current mortgage or rent. Continue, just use your credit as normal. And pay it as normal. Keep the same insurance company. Stay current on all existing accounts. Expect requests for additional documentation throughout the process. It's very common. Trying to give you an idea. If you can just imagine that, like, I'm a pilot and we're flying us through the air, and you're in the back, you're kind of along for the ride. I'm going to come on the speaker, and my job is going to be to communicate to you, hey, we have some challenges, i.e., we have some turbulence coming up. And, I'm going to do everything I can. I'm going to fly high, fly low, move around, renegotiate. I'm going to do everything I can to make the flight as smooth as possible. And my job is to communicate to you as we're having these challenges come up along the way. They're very normal. It's very standard. It just really has to do with red tape that you have to go through. Don't bother trying to come into the cabin and help me fly. You don't have to do that. I'll fly the ship just fine for you. We'll get it into a safe landing. I promise. All right, don't make any large purchases before you close. Don't change banks. Don't make any large cash deposits. Don't do a lot of transfer balances. Don't close any credit card accounts, as that will lower your credit score. Don't consolidate debt, or any of that kind of stuff. Just whatever you were doing before you started, continue doing afterwards. I do have a story to tell you about this. Had a young lady who was so excited about her new place, and then she realized that she was going from a small apartment to a larger house. So she was going to go from like 800 square feet to say 1,800 square feet. And she's like, gosh, I got to make sure that I buy some furniture. So she went out before she closed, bought furniture. They talked her into a credit pool at the furniture place. And they were like, well, we'll give you 10% off of $18,000 worth of furniture. Well, I mean, that's not a small amount of money. So she did it to save the $1,800, of course. And the problem is that she now had a new $16,000 balance that had to show up on the debt to income ratio. And the bank said, well, with that extra debt, now she doesn't qualify for the home. Now we were able to kind of work through some things with the underwriter and still close the transaction and get it done. But had she just waited until after she closed, that wouldn't have been a problem at all. So that's, very important. Uh, and we also want to avoid maxing out or overcharging on credit card accounts because, again, that can kind of change your credit score. And if you have $500 balance on the credit when we go to do your initial credit pull, and then we go to close, and that $500, maybe slings off a $50 payment's not going to be a big deal. But then they go to check the credit, which is something they frequently do right before closing. They go to check the credit right before closing, and that $500 is now 7 grand because you've made some additional purchases in anticipation of getting into the home. So wait until you actually get into the home to make those purchases. Very, very important for you there. Uh, so underwritten pre-approvals versus rate holds. Essentially, a rate hold is when you tell the bank, okay, reserve the rate. Here's my income docs. Here's my asset documents. Here's where I can prove that I'm ready, willing, and able to pay this loan back. And it's just an extra step in the process where they can underwrite the file and review your top-notch finances and your financial information or your financial situation, and make a complete decision. Okay. Guaranteed pre-approval. Mistake number three is using your bank. Yes, the banks are great. We love banks. Some of these banks can feel like they're the bank of the Northern Hemisphere, and they want to do business with you if you fit in their little buy box. Um, and that can be okay, but the challenge with that is that whatever product they have available, that's what they're going to offer you. That's it. Whereas if you use a professional mortgage person who has multiple banks to choose from, and these banks actually fight and compete for each other, they fight and compete for your business. Um, they can shop and get you a better rate, get you better deals, get you favorable terms, maybe get you an interest rate that's lower, which in turn lowers your payment. Or maybe they're compatible with a down payment assistance program that you want to use, and that would also lower your payment. Maybe they would allow for the seller to kind of kick in and contribute to buying your rate down and at the same time cover some of your closing costs. So all of those are going to be very important. Whereas if the big box bank does not allow a program like that, that's it. You're dead in the water and you've already got a credit pool out of the way because no matter where you go, you're going to have to at least get a preliminary credit pool to do a loan pre-approval. Um, We've talked about this stuff already. I mean, they're big box banks and they do what banks do. They, charge fees and nickel and dime us together. They get our money. They turn around and lend it out at a higher rate. That's the bottom line. That's what they do. So this talks about go with the actual posted rate versus what they're, telling your annual percentage rate is going to be. The annual percentage rate is what the rate would be if you included your closing cost as part of interest. Mistake number four, buying directly from a builder. Builders are great. There's no doubt about it, but this mistake can cost you between $5,000 and $40,000. When I was negotiating with the builder to save that $30,000 from my buyer, Alice, she pointed out to me, well, we've actually got a comp at $468,000, and we've got another one coming in at $483,000. And she was trying to get us at I think it was 459. She was trying to get us at. And what she failed to mention is that those transactions had not closed yet. And the ones that we did have that were closed was 419 and 409. So I said, well, based on the comps that I actually see, why don't we try and see if the lender, or see if not the lender, the builder will come down to 410, because that's where my buyer is comfortable. She kind of hemmed and hawed about it. She's like, I don't know. They know that we close these transactions at $468,000. And I kind of put a smile on my face and I said, well, congratulations. You found a couple buyers that didn't bother pulling any comps. And she kind of cracked a smile. And when she cracked a smile, I was like, hey, I got her. I knew I had her. So she went back to management, and management approved the 410. And that's the kind of thing that would not have happened if Alice didn't have somebody in her corner negotiating on her behalf. Those site agents that are there, they're going to be very nice. They're going to give you cold water and hot coffee. Um, they're going to be super nice, but make no mistake about it, they work for the builder, whereas a realtor will work for you. Okay? Uh, the number of transactions that we've put together. Um, uh, you know, Alice actually asked me, "Well, this is brand new construction. A um, do I even need an inspection?" I said, "Absolutely." There have been so many times that the private inspector found things that the public inspector, the city inspector, did not find. And after going through some rehabilitation projects with a home. Um, Boy, we had the inspectors come out and they just didn't understand how things were. We had one inspector show up, couldn't even read the plans. Thought that was funny. But, it happens. And having an inspection costs you a few $100s, I understand, but it gives you a lot of peace of mind. And, you know, I want you to think about, you go through all this expense, you go through all this trouble, you got a big mortgage payment now, you're no longer paying rent, now you're getting into equity, and 6 months down the road, there's a problem with your roof. And we didn't know that there was a problem with the roof because we walked through the house, we didn't walk on the roof. I walk people through houses all the time. I do not walk them on the roof. Then you could walk on the roof, and because we don't know anything about roofs, wouldn't even know if there was a problem. And had we gotten an inspection, it would catch that. And that right there could be a 10, 15, $20,000 mistake right there. Okay. Um, we're also going to kind of take a look at your overall financial picture and make sure that whatever negotiating we're doing is going to make the most sense for you. The way to complete a transaction is when you have both parties that are winning. So there's a seller out there somewhere that wants to sell their house because they want to move on. They want to go to their next place. They want to go to their next location. They want to sell their current house, buy another one. They want to update, they want to upgrade, they want to downgrade, they want to upsize, they want to downsize. They're relocating, like they just want to be done with that house so that they can move on with their life. And then there's you that want to come along and have an opportunity to live in that home. So if we can meet in somewhere in the middle, get the process done and help you walk through it, then everybody's going to be happy. They're going to be happy that they sold the place. You're going to be happy that you bought it. And that's the whole idea. So, yeah, mistake number 5, skipping a home inspection. I tell you, I had somebody who kind of balked at the price of getting a home inspection. and they moved in and they realized that there was a problem with the shower. And the agent was the agent was a little kind of laissez-faire. Oh, if there's a problem with the shower, we'll send the plumber out there. It'll just be a couple $100. It's no big deal. We'll get a couple pipes fixed. Yeah. The problem with the shower was that there was an issue with the foundation. And I'm gonna, as good as a realtor as I am, I'm not very good at engineering. So there was no way that the problem with the foundation was visible to the naked eye, and that we could know about it. But the inspectors have tools and tips at their tricks that would have, ferreted that out. So to just save a few $100s, they decided not to get the inspection. Lo and behold, 6 months afterward, they found some issues that could have been caught. And like, these mistakes can be incredibly costly. $20,000 is a conservative estimate. I've seen foundation repairs be as much as 50 or $60,000. So one of the things that we're going to want to do is that we're going to want to know the foundation of that home is really good and it's solid. That's super important. That only makes sense. Um, yeah, this is a big one right here. You run the risk of inheriting non-structural safety issues as well. Um, and a good inspector will go, these inspections take 4 hours. I mean, they go through the house and fine-tooth comb. They're walking up on the roof or they're flying a drone over the roof and they're looking for damage. They're actually going up in the attic, crawling around, making sure that the insulation is good. They're checking every window to make sure that it opens and shuts. They're checking all the windows to make sure that it's well insulated. I mean, it's very extensive what they do, and it's worth it because if you identify an issue, then we can always go back to the negotiation table and say, look, we found, $7,000 worth of problems here. We'd like you to fix X, Y, and Z, and then the rest we'd like you to just discount the price. So this is what I meant by, once we find the house, we sign the offer. This is what I meant by this is where the work really starts. The work doesn't really start until we actually kind of get into the process. Skipping mistake number six, skipping the condo document review. So that's going to be very important. So condominium is kind of an association. It's partial ownership. You own the unit inside the building, but the building is owned by the condominium association. So for that reason, whatever documents they have are going to be important to review. The most important one is going to be what your rights are as a unit owner within the condominium, and then of course how they're handling their money. It's are they is everything that they're spending money on, does it seem reasonable? Um, and that's something that is very easy to determine just by taking a minute to have somebody that's familiar with condominiums review the documents. I'll look at the documents and I'll read the documents, but I'll actually recommend that we have somebody that they're accustomed to reading the documents and processing them into, okay, what is it? How does this translate into actual living? So, for example, in the condo document review, they're required to disclose if they're engaged in any lawsuits, right? That's going to be very important information for you to have before you buy a condominium because you want to know what their potential liability would be because if the potential liability is too much, then they'll be taking the money out of those condo fees and coming to you asking for more money. So here's a recap of what we've discussed today. Don't ignore the first time home buyer program. Get pre-approval. before home showing is very important. Don't just go to your big box bank for a mortgage. Use a broker with access to multiple lenders, including banks, so that they can shop for you. Do not skip a home inspection. Don't buy directly from a builder without having somebody negotiate on your behalf. And do not skip condo review. These are all very important. How has your time on this free webinar been well spent? You know, type in the chat if you've liked what you've heard so far, if you find this information useful. Do you now feel confident or a little better about your ability to purchase a home? Is it fair to say that using these tips would give you a significant advantage when buying a home? Are you glad you received, essentially, are you glad you received this information? Don't be shy. Feel free to type in chat if you'd like. Um, so hopefully this was valuable to you. At this point, what I'd really like to do is um, invite you to spend some more time with me. So I'll go ahead and I'll put a link. Let's see if I can, what's going on here. Here we go. See if that works. There's a link in chat. You can click on that link and you can book time sometime over the next few days. This is free. It's where we spend some one-on-one time and we can kind of go over your specific situation, see what it is that you're looking to do. Um, and feel free to bring any questions you have to the table. If you have any questions right now, feel free to type those in as well. But yeah, definitely, I just would invite you to schedule a 30-minute consult with me. We'll go over some ideas, talk about what kind of home you're looking for, what's your situation that you're in, um, and things like that. I mean, really, it just comes down to having somebody that's on your team, that's on your side, that's gonna, you know, do battle. So feel free to log on there and let me know what you think. Any other questions out there? All we do on this 30-minute call is we just kind of sit down and go over what your goals are, what kind of house you think you need, how much space you need, what's your situation, um, and we'll do a financial review to make sure that we can confirm what your buying power is. All right. Just click that link right there, and then you'll be able to get space on the calendar there. Doesn't seem like we have any questions. If we do have any questions, feel free to give me a call. Again, just, this link, follow this link, and if you see this on the replay, you should actually have a copy of this link available to you in the email that you're going to receive. You're going to receive a text and an email with the replay. So feel free to book some time and feel free to ask any questions, anything we can do to help you out. But I absolutely love to help you out. Okay, guys, been good seeing everybody, and we will talk soon. Let me know anything I can do to help you out.